Welcome back, everyone. Jake here. Quick life update. More than likely, this will be the last video I film in this apartment. The reason why is the movers are coming tomorrow to pack up all my stuff and take me away from Minot, North Dakota. For those of you who follow my channel, you know that I am currently relocating to a house in Las Vegas, Nevada. That's where I will be doing YouTube full-time going forward in the future. So videos this week might be not as frequent as I've been posting this last year, but I promise once all my household goods are delivered in Vegas, I can start increasing the frequency of when I post. And I keep getting comments and questions. People want me to post more often and talk about more timely topics. However, I just want to caution you that my style of investing is not reactionary to the daily news events. If you guys go on CNBC or watch TV, or even watch other finance YouTubers, they have to produce content. They don't have anything more meaningful to teach you or explain to you. So whatever knee-jerk news story kicks that day, they're going to make a video, they're going to post an article, they're going to talk about it just to fill airtime. So on my channel, I don't want to do that. I don't know what the flavor of the day will be that might panic you to sell at a loss, and I don't want to encourage that style of trading or that style of investing. So given the last 2 weeks, guys, there was a lot of volatility. If we look at my Schwab accounts, we'll just go ahead and say that on January 1st, the beginning of the year, my account was at $60,000. It was $60,245. And by January 4th, I was already up to $334. And then there was this tech sell-off of the cloud computing stocks, or stocks that have very high ratios or potentially no earnings at all. And I think I made an update video where my account was like way up here, and then by the end of the day it had sold off. But I didn't sell anything, guys. I didn't trade anything. On my channel, I focus on the fundamentals and the technicals. And when you get a newsworthy event of some kind, that's all short-term trading. That's all background noise to get you, the retail investor, to panic and sell at a loss. And the reason why I'm so confident right now that the market is fine and that, in the short term, I think the market's going to go up. And the reason why is because people have money. People have money to invest. They want to buy stocks. They're still working their jobs. They're still contributing to their IRAs, 401ks, whatever. So if you just sell out of the market now, people are going to keep buying index funds, and the index funds keep buying everything. So there was some short-term volatility. However, my account is back on track. I'm at a new all-time high, 66,235. So let's go through all of my short-term positions. And I really would, guys, like to take profit and sell a position to open a new one. People keep asking for videos like, Jake, what are your top 5 stocks to buy now? And there are some stocks that I'm interested in, but I don't have any money in my account, and I've made a limitation on myself that in my Schwab account, I can't deposit more. So I have to sell something in order to buy something new. So in this video, let's just quick recap. And to start, guys, as far as fundamentals, nothing has changed for any of these companies. We haven't gotten any quarterly earning reports. We haven't gotten any press releases. So if something fundamentally changed with any of these companies, then I would reevaluate. Do I want to sell? Do I want to buy? Fundamentals haven't changed over the last 2 weeks. And the technicals, I check the charts every day. The technicals all look good. So let's go ahead and start with SPY. This is the S&P 500 index fund, and this stupid debit spread that I opened like 2 or 3 months ago. But I'm currently down about $1,100. Once again, I bought calls at 470 and then I sold calls against them at 480. How do I make my max profit on this spread? I need SPY by January 21st to hit 480. And it might do it, guys. You know, when we look at these stochastics, this is the technical indicator I use to follow short-term trading. It is the percent K just crossed above the percent D today, kind of indicating that the sellers have exhausted a little bit and that SPY might be able to rally. If this can get to 480 in the next 2 or 3 days, guys, I want out of this spread. I don't want to be doing short-term trading in my Schwab account. Later this year, that's what my Robinhood account will be for. So I can still make, guys, about $5,000 profit on this spread if SPY can just get to 480 in the next couple days. I will happily take that profit. Next up is HCI, and this was a spectacular failure, guys. This is why I don't get involved in IPOs or SPACs. I just recently made that video for you as a reminder. And with this stock, I was trying to be cute, and I was trying to get pre-IPO shares of TipTap so that I could be the one dumping them on day one of them being publicly traded for a quick gain. But I got punished, as all of the IPOs and SPACs and tech startups sold off. HCI sold off as well. However, I still feel like this press release is coming, and HCI will bounce on that. People have asked me, you know, should I be adding to my position? And I wouldn't do it. There appears to be a level of support here at $80. This was a prior line of resistance back in the spring. And until this stock can prove that it's not going to bounce off its 20-day moving average and continue falling, I don't want to add to this position. My cost basis on this stock is terrible. It's currently $125 a share. So it is appealing to try and snag some here at $80, but there's nothing saying this can't go lower. And if it can't find support and get above its 20-day moving average, I don't want to even consider adding to this position at this time. Next position is Apple, guys. I'm currently up 92% on my cost basis, and Apple is looking beautiful. Given the tremendous sell-off in the NASDAQ, the QQQ, I think the NASDAQ had like 5 negative days in a row. The fact that Apple is holding between this 170, 180 range is really nice. When you look at these technicals, guys, you can see that 170, buyers have stepped in twice in the last month or so. And the 4 major moving averages have all lined up. The 20, the 50, the 100, the 200. So Apple, in my opinion, can still go higher. I don't think this is topped out yet. And the nice round number that everyone is looking at when they set their sell limits is $200 a share. So Apple and the other FANG stocks report the first week in February. I definitely think there's going to be some buzz around Apple's holiday sales, and this will get it above this 180 line of resistance, get it to 190, potentially 200. I will definitely take profit in my call contracts on Apple once this is above 190. So as soon as it gets there, I'll make that video for you guys. My biggest winner so far is Berkshire Hathaway. It's doing better than Apple, which is kind of is confusing, but maybe not so, because Berkshire owns Geico, an insurance company, and Berkshire is kind of viewed as kind of with the insurance or the investment or the financial stocks. And all the financial stocks have been doing well as tech has been selling off. The thesis being that as interest rates rise, this will help banks make more money. For some reason, that helps Berkshire. But this stock shot up huge, guys. And I was looking at it right here, and I said as soon as that 200-day moving average catches up, it's going to take off. And if you're in this stock as well, what's happening now is it needs to take a breather. It moved too fast, too far too fast. And look how far above its 20-day moving average it is. So this is a clear uptrend. It's going to go higher eventually. But buyers are not going to join in on this rally until the 20-day moving average catches up. So in my opinion, I think this could actually fall a little bit as the 20-day comes to it, but as soon as they touch, it'll then go up even higher. I will start to think about taking profits once Berkshire hits 330. I think that's entirely reasonable for this price. The next one is Capital One. I think at my worst, I was down 50% on these call contracts, guys. But once again, I trade on technicals and fundamentals, not news, not on just share price going down. And Capital One is now positive, 2%. So I'm not negative on these contracts. And Capital One has been benefiting from the rally that all of the bank stocks have been having the last 2 weeks. It doesn't look pretty, but it is now back above its 4 moving averages, the 20, the 50, the 100, the 200. I honestly will declare victory and be happy if I can just get this share price above 170. It's currently at 158. So if for whatever reason Capital One on earnings or just momentum alone can get back above 170, I think I'll probably take profit and get out of this position. The financial stocks don't act as the same as basically the rest of the market. You've noticed the last 2 weeks they kind of move on their own when they want to. They go down together, they go up together. So I would rather be in different positions that are not so dependent on the sector at large. Next, we have General Dynamics, and once again, guys, this is just trading purely on the technicals. As soon as the 200-day moving average caught up, I think I got involved in this stock right here. It then took off, and the uptrend is still good, guys. There was a line of resistance here at 210. As soon as it got above it, it's now treating 210 as a line of support. So buyers step in when General Dynamics is around this 210 mark. So as long as it stays above its 20-day moving average, this is still an uptrending stock. It still looks good. All 4 of its moving averages are lined up. Buyers are happy. So where is General Dynamics going? It's above 210, so it's probably going to go at least to 220. I'll start thinking about taking profit in this position if we can get above 220 or 230, but I don't know. Defense stocks, they're not very dynamic or explosive, guys. Next stock is HCA Healthcare, and this one is really interesting because I thought the 200-day caught up to the share price. We then had a tremendous run up. It got to 260, and it was above 260. It hovered. It got as high as 270, actually. But then this is the day the market sold off huge. That was the day I did my last update video. It's then trended back down. So what's happening here is HCA looked like it was going to break through this line of resistance at 260. It got rejected, buyers dried up, it then trended down, and we're just waiting for this 200-day moving average to catch up again, and then HCA will try again to get through this 260. So I'm still confident that this stock is good. It's set to go off at some point. It's going to trend up. We might need to give it another month or so, but if you were thinking about getting into this position, if it gets down to 240, that's definitely a buying opportunity. And then finally we have Texas Instruments, and this is really interesting, guys, because Citibank downgraded Texas Instruments, and they said, their margins are shrinking. They're probably not going to be as profitable as they were last year. So they lowered their price target from 220 to 187, from buy to neutral. What does that mean for a stock? It means the shorts jump on it because it got downgraded. And Texas Instruments fell from 190 to 180. And then, what do you think happened the next day? Well, one, the short sellers have to close their position by buying back in. But I don't fear this stock collapsing. I mean, it's a semiconductor. It's not really a tech stock. But what is the downside risk of all of these companies that I'm in? And it's, in my opinion, very low. The entire market could collapse, obviously, and that's a downside risk. But with Texas Instruments, when this share price goes down, the dividend yield of this company goes up. So the dividend yield of Texas Instruments is 2.47. Is Texas Instruments going to fall to $90 a share like some of these other high growth stocks, and then the dividend yield is just 5%? That's not going to happen. Large institutions will buy this alone for its dividend yield of 2.47 because this is still higher than what you can get on 10-year treasury notes with government bonds. Additionally, guys, just look at this share price movement over the last 15 years. I feel like this alone gives investors confidence. So anytime Texas Instruments dips significantly, buyers will step in. And oh yeah, by the way, Texas Instruments does stock buybacks. So this huge green candle on the 10th, once again, short sellers covering, dividend investors scooping up the stock, and Texas Instruments itself buying back stock if it waits for these events, these sell-offs, in order to buy back stock of their own company. So there you have it, guys. That is a review of all the positions that I'm holding and my thought process given the events of the last 2 weeks. Once again, if you follow other finance YouTubers or CNBC, they have to make content every day in order to make money. So they're going to clickbait you with these panic selling stories or these euphoria, gotta buy it now, pump and dumps, and that's just not what I want my channel to be about. That's not how I make my trades or my investments. If you guys like this kind of content, give me a thumbs up. I appreciate your support. If you have any questions or comments, let me know down below. I love hearing from you guys. Till the next video in Vegas, take care.